right, guys, how's it going? Hope you guys are having a great day. I'm sitting here with Brian Hogben of Mission 35 Mortgages. He was a guest speaker at one of our panels, I think it was last week or so, right?
Yeah, last week.
Last week,
Totally.
and there was a ton of energy, and I just had to have him come be a guest and then talk about what everybody's talking about right now, which is mortgage rates. A lot of stuff out there, and we could all use some advice on this. So we're going to run down some scenarios, some potential projections for the future, and then certain things that you can do to help yourself out in today's times. So, Brian, tell us about yourself.
Long-time listener, first-time caller of the John Show here. Okay. So. I've been in mortgages for a long, long time. Worked at the bank for a number of years. I actually started out as a bank teller. So bank teller as a co-op student, got paid $10 a day, thought I was the richest guy in the world, got 2 credits for it, did the bank teller, did customer service, financial planning, and then got into mortgages. And I've been doing the mortgage thing now for, 20 years now. 20 years in the mortgage biz, yeah. So
Unreal.
Yeah, and I love it. You know what I think the one thing too for people in our business and real estate and mortgages, you go through ups and downs, but the longer that you're in it, the more you know.
100%.
Right? Like you know
something about experience, right?
Yeah.
Yep.
So I really, really enjoyed it, and I think this is the first time I've been in a pandemic and come out of a pandemic, like most people.
For most of us, yeah.
We learned a lot about it because right now we're seeing interest rates climb up higher than they have. We're actually, depending on when you're listening to this, we're on the eve of a Bank of Canada announcement tomorrow.
Untimely that we're doing it today versus after, but
it's okay. We got our crystal ball. What do you think is going to happen tomorrow? What do you think?
I think it's going to remain the same.
Yeah.
You too, eh?
Yeah, I think we're going to stay the same. You know what? Bank of Canada, they're humans too, right? They're emotional people. I know you don't think they're.
Are you sure? Are you still the same bank?
Sorry. It's funny actually because I was at our national mortgage conference, and the head economist for CIBC, a guy named Benjamin Taub, was there, and he asked the question to ChatGPT. He said, "If you were the Bank of Canada, what would you do about interest rates?" And ChatGPT answered back, "I would have stopped raising interest rates 50 basis points ago."
50 basis points.
Yeah.
What did he say? Do you think that was based on? Just.
You know what? It's funny. He literally said that. So the Bank of Canada, if forced with 2 options, if forced with a recession in one hand or inflation in the other, they will always choose a recession. They'll always push a recession over inflation. And the Bank of Canada worries about having inflation shoot out of control.
Of course.
And the only hammer, the real big hammer that they have, is interest rates. So by rising interest rates as quickly as they have, is a way for them to know that they're going to trigger a recession, which slows down employment and slows down inflation. So unfortunately, or fortunately, Bank of Canada, they're human beings. They literally lay awake at night worrying about some of the same things that we do,
of course, yeah.
But they're worrying about inflation.
Yeah.
So they want to make sure that they hit it hard, hit it fast, and make sure that
gets under control. We don't have a major issue. So in the meantime, we've got some crisis for some people.
Yeah.
And so we can briefly touch on that, just where people are with their mortgages, some strategies they can do managing moving forward. Again, we're talking about sub 2% to sometimes 6%.
It's a lot. Like, when you really sit back and think about it, like, we've never seen interest rate rises like this. Like, you're exactly right. Like, people are sitting at below 2%.
It's bonkers. Yeah.
And now it's over 6, right? And the crazy thing too is that they say that 50% of mortgage holders right now still haven't actually been affected because there's a lagging effect of, if you took out a mortgage in 2020 and you had a fixed rate of 1.95, yeah, and you're not touching it.
Yeah.
Right? It's going to stay exactly the same.
Riding that wave.
Yeah. So what a lot of people can do, and I know what we've done for a lot of people is, listen, I'm a big believer in wanting people to pay off their mortgage, but I'm also a big believer in retaining your asset, right? If you can.
Yep.
So we've re-amortized a lot of mortgages for people. So what that looks like is if your mortgage came up for renewal at a significantly higher rate, let's say you were on pace to pay it off over 20 years or 15 or 17, we re-amortized it out over 30 years. So if
lowers the payment by, what would you say percentage-wise? What would that?
It could lower your payment by 10, 15, 20% in some cases, right? So it feels like you're going backwards, but the reality is that interest rates will come down again as well too. So if you do this temporarily, if spending got a little bit high because of inflation, now you can wrap in some of the debts, because this is what a lot of people don't talk about is most Canadians who own a home the prices have still gone up over the past 5 years.
That's right.
Would you say?
Oh, 100%. Yeah.
Yeah.
We've obviously lost a little bit over the last couple of years, or the last year or so, but again, what it comes down to is where's the market going? And we don't have enough available homes, even though right now there's more homes on the market. We both know that when there's fear in the marketplace, people don't move and take action, right?
Yeah.
So we see a lot of people sitting on the sidelines, and I feel like the demand is just increasing, but no one's actually doing anything. So even though nothing's necessarily happening right now, once interest rates do come down, people still need to move. They still need to upsize, they need to downsize, they need to there's separations, all these things which are at a standstill right now while they're waiting to see it happen.
Well, I think, and you raised a great point there, John, because I think what's going to happen is with all this pent up demand, you have immigration, a lot of people, record number coming in, you have a record number of people waiting. When we see interest rates, pause for long enough and then eventually drop, which they will, I believe all these people will probably come back into the market, and then that's going to create competition again, right?
Oh, that's just it. So we were going to talk about this too. It's like, is now a good time to buy? We'll get into some numbers because I want to ask some scenarios for some ideas. But is now a good time to buy? And I think the thing that was super evident in the last 2 years of selling real estate is that people were so frustrated with the multiple offer situation. Every time they're doing a deal, they had to compete against 20, 30 offers. You had to worry about appraisals coming in. You had to throw in money that necessarily didn't have, or like outside of the comfort zone just to own something. And now it's kind of crickets out there. Like, there's still people showing up to open houses, but not as many offers happening. And then we're seeing houses sit, and people are calling and saying, "Hey, I like this house, but I'm just going to wait it out." And so now there's opportunity to get homes at a pretty significant discount now. What's your thoughts on it? Would you rather buy higher at a lower interest rate, or would you rather buy lower at a slightly higher interest rate?
I love that question. Absolutely, unequivocally, I'd buy lower with a higher interest rate. Absolutely, because I think, and you've probably heard this before, many people, you make money on the buy, right? On the buy. And when they say you date the rate, marry the house, we've heard lots of those situations before. Even me right now, I'm leveraging up. I've got offers on other investment properties right now because I look at it. I can buy under market value right now. I know that I'm going to pay higher interest rates for them right now, so my cash flow is going to be tighter right now. But I also know that's going to change as well too. And I also know that rents are probably going to continue to go up as well too based on supply. And to your point right now, I'd way rather buy when I can actually put in a condition of financing. I can have a cup of coffee with my wife, my partner, think about it, do a home inspection, get like it's
due diligence, right?
It's a much more pleasurable experience, right?
And if there is something wrong during that due diligence period, you can renegotiate if the seller's willing to. So someone comes to your desk and wants to buy something. Walk us through the process.
Well, I think, because interest rates are so high and we have the stress test for majority mortgages right now where you have to qualify 2 points above the rate.
Yep.
So some people are qualifying at 8%, 9%, or 10%. So that really
limits your capacity.
Oh my gosh, yeah. So we do have certain scenarios, and I just went through a fun fact today where we have B lenders. We call them alternative lenders, right? So they may charge a point or 2 points higher than a bank. But what they do is they have looser guidelines. So someone who has 20% down, I'll walk you through a scenario. They have 20% down. Let's say they're buying just $1 million property, $800,000. We can stretch that mortgage in some cases over 35 years. And there's a lender that's coming out soon that'll stretch over 40 years.
I wondered if that was going to happen.
It is happening, yeah, which is exciting. So now what that does is it helps them get approved for more. Now, what we're doing and looking at here is that if you put them into a higher rate for a 1-year term, they're probably going to pay 1.5 to 2 percentage points higher on their borrowing costs.
Yeah.
But here's the kicker. The real estate only has to go up by 1.5% in order for them to make money on that asset. So if real estate goes up by more than 1.5% over the 12 or 18 months, you've more than compensated for your additional borrowing costs.
I think that is a great example that we really need to highlight, because when you look at the numbers, that's what makes making a decision so much easier. I haven't heard somebody present it that way. I love it. That's great.
Yeah, well, I think sometimes we get worried, when you look at, when my parents used to tell me about interest rates and debt, we have this mindset of interest rates high, save your money, don't get into debt, like that sort of old adage. But the reality is that, I'm not saying, I think you need to stay within your budget. First and foremost, what can you afford, right? If you can't afford it, that's a different conversation. But if you can't afford it, don't wait. Like if you can afford it, you've got stable income, you've got a good job, you've got great credit, down payment. I don't see a better time than right now than getting into the housing market, especially because I think Q4 right now in 2023 where we are, providing that the rates don't go up and they pause tomorrow.
Yeah. Hope.
I think we'll be in a quieter market, but I think that's when the opportunity rise for buyers.
Buy when everybody else is selling, and sell when everybody else is buying.
What's the prices like because you are in Burlington Water now? What are the prices like that you're seeing right now in those areas?
So that's actually interesting. I was looking at this before because I knew you'd ask that. So the average sale price in Burlington it kind of rose over the month of October. Yes, we're not completely through the entire month, but we're sitting at just over 1.2, which is up from last month about 1.15.
Well,
And so we're obviously higher in inventory. We're seeing housing, the amount of available houses for sale in Burlington hit over 500,000. And we used to use the benchmark, or we still do, sorry, but 500 homes per sale kind of represents a balanced market. And as we head over that 500 mark, we start to see that there's definitely more options for buyers. So the average sale price increasing, yet months of supply has gone up significantly. We're over 4 months, when we're traditionally around 2, and then obviously the pandemic was below a month. So we're seeing less home sale, but the average price increasing. So I suspect the pause in market and the lack of sales actually happening. We're used to seeing 300 homes a month sell, and this month I think we're at 80. We're 3/4 to go through. So there's a lot of people sitting on the sidelines, which tells us that we haven't really seen that decrease yet. But here's what I tell my clients: is like, yes, the average sale price is up. That means spectacular property that's turnkey. Those are still selling and getting a good price. But the houses that are sitting there that you just don't know the situation. You can find out the motivation, and it might be some room to negotiate to get it down to that 97 to 95% list to sell ratio. So I don't think we've seen the prices dip, but I still believe the opportunity is there. It's just a matter of doing the work, going to see properties, making some offers. You may not get the price you're looking for on one, but there's a lot of opportunity out there. There's some people who might be stuck in a situation that just need to sell. You just gotta find those opportunities.
that's what I've seen too. I think I've noticed that with a lot of the offers that we see 99% of them are conditional offers now. Conditional on financing, conditional even on sale now. I remember that used to be a unicorn like 2 years ago.
Oh,
That
yeah.
was like,
And now it's still a pain in the butt. It was a pain in the butt before, and now it's like, it's just, as a selling person,
right, of course.
it's
right.
really challenging to make sure that offer coming in is realistic in price. And most of the time, it's not.
But I think, like you said, to your point, like to see people coming in with condition of finance, there are buyers in the marketplace if you're looking at selling right now, and the people that are coming in. So are you seeing 5% below asking price is normal if you're putting in an offer? Like it's okay to go in. Like if you see something a little bit outside of your price range, is it okay to go lower now? Because I think that was blasphemy like years ago, right? Like it was unheard of. You can't do that.
Yeah, and I felt even bad saying that. It's like, oh, we gotta go 200, 3,000 over asking price.
Yeah.
And now it's like, hey, maybe we could go significantly over. I think it's dependent on price points.
Right.
So when we're pricing properties, I sell some higher end luxury properties, and that's a different pricing strategy than like the average 800 to 1.2 that represents
true.
first time buyer or someone looking upside. And when we price homes, we are trying to put homes on the market at a price that will generate some interest. So that means having real conversations with our sellers, and then also recognizing, as you said, you make your money on the buy. So if we can get a great deal on the buy, it makes sense to sell maybe a little bit lower. So we're trying to to put ourselves in a position of strength, so when an offer comes in, it's within reason of the asking price. But when we have a house that's a higher end price point, and maybe the seller's like, hey, I have to try this price.
Right.
They're setting themselves up for those 200, 300,000
Right.
So that's like that 1.7 to 2 million range where you'll see an offer come in maybe 1.5, 1.6. And what I've discovered, we live in Canada. No one wants to offend each other, right?
It's true. We're so nice.
We're so nice. No one wants to say, hey, here's an
Yeah.
offer at a lower price. Like, I don't mean to offend you, but this is what the market's representing. People
Yeah.
don't do that. But why?
Why not?
Why not?
I always say, why take no for an answer until you give someone the option to say yes?
Yeah,
Maybe they'll say yes.
Can't win if you're not in the game, right? Like just throw something like there and see if it works. Now, agents across the board are probably cussing me out right now. It's like,
Yeah.
no, I don't want to be doing 20 offers per client, but I think that's what's required to be successful in this industry.
And I agree. And I think, and from our side, what I see is, there are some people in situations right now. There are some people that are over leveraged. There are some people that had, let's say, because going back to those B mortgages, there are people right now that took out a 2.5%, 3.5% B deal.
Yeah.
And it matured at 7 or 8, which is massive. So there are some people that are leveraged out there that are saying, listen, I need to sell now. Like I see fire sales that do happen sometimes where it's just like, I'm over leveraged. I bit off more than I can chew. I gotta sell. whether you're an investor, home buyer, whatever it may be. And I think those are the opportunities sometimes because like they just need to be like, hey, quick close. And there are people that do need to sell right now if you're a first time buyer or even a move out buyer.
Yeah, they're still available. I mean, there's, like we said, lots of opportunity in this market. Still stuff happening, and life is still home.
Yeah.
That's what it comes down to.
Yeah. And I think too, one thing I'll talk about is arrears really quick too, mortgage arrears, because I think there's a lot of fear in the marketplace, but arrears with the major banks right now, arrears is people who are in default on their mortgage for, over 30 days or 60 days. They're at pre-pandemic lows. So basically they're at 2019 lows. So people who have mortgages with major banks and institutions are paying them. They're maturing and they're paying them. This is not a real big news story. It's kind of like the landlord who says, I got 12 post-dated checks and every single one cashed.
Yeah.
No one talks about that. It's always more fun to talk about the hoarder, the drug addict, the guy who never paid his bills. But the reality is that there are a lot of Canadians that are still making their mortgage payments, which means we still do have a relatively healthy market out there.
And I think that's super important to focus on is that the media and wherever our sources are, it doesn't get clicks, right? So it causes this fear, which also contributes to people not pulling the trigger.
True.
So give us some ideas of where to look for our sources so that we can promote the positivity that is there, the opportunity that aren't scared.
To look for,
The sources, like how can people be educated without being subject to just getting...
Definitely look for influencers in front of Lamborghinis. I think those ones, they always know what they're talking about.
That's my criteria.
Right?
I think we were the same.
If they got a private jet or a Lambo, yes, they know what they're talking about.
They are
right?
definitely an authority in this field.
Number two, I would say, you know what? I like to go to the source. So I'm a mortgage nerd. I like to go to straight like CMHC numbers. I go straight to the Bank of Canada where they put out their monetary policy reports. I go to the banks when you end up looking at the actual CEOs of the companies when they release their earnings. You can look at straight at those numbers as well too, right? Like industry articles that go a little bit deep, like with, you're looking at TREP numbers when you're actually looking at the real numbers of things, right? That's where I look at it. I don't get, I love social media, but I don't get all my information there, right? So I subscribe to, Globe and Mail, Wall Street Journal. I do a lot of paid articles as well too, where I'll pay people for research because they're the ones digging into the numbers and digesting it, and then I get their points of view. So I think it's important to go into that. I always equate it to fitness. We're both healthy guys, like stay in shape. If I have a personal trainer, I want to see his abs. Because I want to make sure he's got abs. Just like if I'm getting mortgage advice, I want to see your financial situation. So I would say wherever you're getting your advice from, do they have what you're really looking for?
100%. I think that you nailed it on the head. And I guess we could assume that you're an authority in the space, that we could watch some of your content. I've seen it.
And I don't have a Lambo, So, not yet.
Now you know.
Yeah. So, no, absolutely. You know what? I am a certified mortgage nerd. And I love our industry. I love helping out our industry. I love talking about our industry. So happy to help out anybody, anytime when it comes down to mortgage advice, mortgage knowledge, because it's my favorite thing to do. We joke and say we're as excited to get people into debt as we are to get them out of debt.
And I think that was part of the reason why I reached out. I was like, I haven't seen a mortgage broker who promotes getting out of debt, paying off the debt, or paying off a mortgage sooner than what's typical. And that's something that was important to you based on your story. And I was like, yeah, that's really cool. Because I think if people are looking for advisors, again, it's that credibility. Like, how did you do what you did to get to where you are? Those are the people who move in life. We both know we're the sum of the 5 people we spend the most time with. And we tend to attribute that to our friends. But also, like, the people who advise us in our largest decisions, you nailed it on the head. Make sure they're a credible source.
True.
So how can we find you on social media? Or
at Brian Hogben on Instagram. You can just Google Mission 35 Mortgages. If you Google just Mission 35, a Call of Duty episode will come up somewhere. So make sure you put Mission 35 Mortgages.
Yep.
And then reach out. Myself, my team, we all love to tell people, really, we're here to serve. And that's what I think we related to, John, because like getting to know you, you're all about service, all about helping people. And I love when values align. Right.
100%. Yeah, you know what? At the end of the day, we're helping people make large decisions, and to get to be a small part of it, it's so rewarding, but also is a lot of responsibility. So I think choosing your people you just got to be super select and careful. Make sure you're getting good, solid advice.
Yeah.
I keep thinking about obviously when interest rates were low, and everybody was getting in the market. We're doing things. It's great to see opportunity. But the old people were in my head, and they were like, get out of debt, don't do these things. And during low interest rates, it didn't make sense to necessarily think about that because you could leverage elsewhere.
Right.
In the back of my head, I'm like, these guys went through recession before.
Yeah.
And they're saying this with all this experience, and who are retired and living kind of where I would hope to be down the road. It's kind of resonating. So part of what your brand is about is paying off your mortgage. And you did that. How old were you do it?
35. Yeah, so that was the whole.
Hence the name.
Yeah, hence the name. You know, Mission
Nothing
35.
gets by me.
You are good.
I'm so
Yeah. No, when I was 35, like when I was 34, because I bought a bunch of investment properties as well too. And when I was 34, I sold my very first property, and it was enough to pay off the balance of my home. So then I ended up having a big party, Mission 35. Vicky was there, I think, from my neighbor across the street there. And yeah, that was it. And you know what? Mission 35 really came from my dad. Was my biggest fan growing up. He was like my biggest supporter. He always said, you know, spend less than what you make, which is still good advice today.
Great advice.
You know,
gray hair, stay there.
Yeah, and he used to say, if you're broke making 30 grand a year, you'll be broke making 300 grand a year.
True. Yep.
You know, so really, my dad gave me that financial foundation, and unfortunately, he passed away before I was able to achieve my goal. He passed away when I was 33. So I opened it up in honor of him because he was like, my dad used to like doing people's taxes. Like, who does that? It's so weird. Like, back with the pencil and the ledger paper.
That's crazy.
You know?
That's a different kind of person.
That's a different human being, right? Like, he would love to help people. Like, he'd be like, oh, you can save some money in a spousal RSP. Like, he used to just love.
Those are the people you want in your life.
Yeah. So, you know, and he gave me that foundation. So I know that he would be proud looking down because what we think about is we're advising people on Canadians' biggest asset, which is your house. So if we can help people give them the right decision, whether we do a mortgage or don't do a mortgage, we're trying to give the best advice because I know that's what my dad would always want us to do.
100%. And I relate to that so much. And I'll tell you briefly my story. So I was a musician before. I wanted to be a rock star, lacking something called talent, but I had the work ethic. So when I was 30, actually when I got married, my father-in-law, super successful guy, he probably wouldn't want me to say this, but I'm going to say it anyways. He bought our first house cash for us. And I was a three-figure, like solid 100. Like I had no money. And I wouldn't have gotten to the market if it wasn't for him. But what I recognize is how he had set up his plan to like help his kids get in the market. And it inspired me. So when I was, you know, teaching music, doing all these things, I decided to get my license. And within 4 years of him doing that, we paid him back in cash. And I was the kid that he was most worried about. He had 3 son-in-laws, and they all had good jobs. And this musician shows up with long hair. I look like I had long hair down to here. And because he had that plan, it motivated me to work my tail off. So my wife and I, 2 jobs each, and real estate, I saved everything I made. Which, I mean, there's maybe not the smartest approach because you can always invest, but for me, it was getting rid of that mortgage because I did not want that leverage over my head of my father-in-law. So it motivated us to work our tails off. So we paid off that house in 4 years. We bought a new construction house, paid cash for that one. And I remember him saying to me, he's like, we finally got out of debt and now you're buying a new house. I'm like, oh, we paid cash for that too. And he's like, what?
That's amazing.
Which to me was a huge accomplishment to just say that, hey, we we left behind all the things that were fun. And it kind of sucked for a little bit because you just compromised. But that was such a worthwhile compromise because now to have some sort of financial freedom later on in life came from that passive.
I love that. That's so true. It's and it's like they end up saying like I heard someone say once, you know what, you can have like a lifespan of 40 years in your job, or you can condense it into 10.
Yeah.
Right? And it sounds like that's exactly what you did. You know, you condense into 5 or 10 is kind of how they say, you know, that's how diamonds are formed under extreme pressure, right? So you're a diamond, right? Because like you go under that pressure, but then your life opens up, options open up, choice opens up, and then you can actually, because you're not just full of shit, forgive me, but like you actually you don't have that commission breath like a lot of realtors do. You know what I mean? You can actually say, yeah, I value whether you want to do something today or tomorrow because you put yourself in the situation you did. Like, I think that's really cool.
Yeah. So, yeah. And that's why I related to what you're saying. So I think similar mindset, being able to help people with that mindset, especially as things require us to be a little bit more smart, but we're spending our money.
Yeah.
Involves having other people in the corner. So,
yeah. Well, and I think it's like, to your point, you can say no to somebody. Like, if you don't think something is the right thing to do,
100%.
You're not just there to put a sign on the line. You're there to do what you think is right and actually provide and offer value to their situation.
I had 2 sellers today that I met with, and I said, you know what, I don't think now is the right time. And it honestly felt great to say, like, yeah, we don't need this right now. Like, I think we will do better. everything that we think is going to happen. Interest rates come down. Traditional spring market. Let's wait. We can wait. Let's do it then.
And see, that's awesome. You know, like that's
Love it.
breath of fresh air.
100%.
Right on, man. Very- Thanks so much for having me, John. I appreciate it, man.
No, I'm
This is
so
great.
I'm so glad you came. I think we need to do more of this.
Oh, dude, I'd love to. Yeah, this is awesome. It's
think-
easy. This is really easy to.
Total. You're
Yeah.
probably gonna get annoyed with us with the amount of questions that we're.
Dude,
But
I'm happy to.
definitely. We've got some amazing clients that are all like past clients that we'd love to have that expertise. So
Well, if you ever want to do like your place here is perfect for parking. Or if you ever want to do like a lunch and learn or something like I don't know. We've done ones in the I don't know what like we've done investment seminars for where it's like buy one more property. You know, leverage to invest. It might not. But like, I can give out a book, talk about it. You can talk about it too. And like, if you want to invite clients, we can do stuff like that. Like,
all over doing stuff like that because people ask those questions all the time.
Yeah.
I think having just a simple system to plug into is the way to go.
well, that's like a lot of people have equity now. Still, like a lot of like we hear the terrible news, but you know, if you bought a house in 2020, the other thing that nobody really talks about, if you took a fixed rate in 2020, half of your mortgage payment is paying off principal. Because the rate's so low.
Yeah.
So if you got a payment that's like $6,000 a month, $3,000 a month's going towards principal. That's $36,000 a year over 5 years. That's
Huge dent in their mortgage.
yeah.
I know.
You know, whereas at rates where they are right now, you're not paying off as much principal. But that's even if the property went down a bit, your principal went down significantly too.
Yep.
So you're still, anyways.
It's good. My leg fell asleep. I'm not gonna be able to walk.
Oh, dude, this is awesome.
Well, it's actually